world. The FDIC just reported the California regulator shut down Silicon Valley Bank.
That makes the second biggest bank failure in the history of this country.
It's the biggest financial sector collapse since '08.
Silicon Valley Bank just shut down. Is your bank next? Is a recession coming? What's gonna happen to the value of your properties? So here's what's happened. SVB, Silicon Valley Bank, just shut down. It is the 16th biggest bank in the US, and it is now the second biggest bank collapse since the 2008 financial crisis. It is a bank that specializes mainly in lending to tech companies. It's important that you remember that because that will come up later in the video. So to understand how this happened, you first need to understand, how does a bank actually make money? Well, in general, people make deposits to bank and they store their money. Now, the bank uses that money to loan to other people. So maybe for personal loans, car loans, mortgage loans, to treasury bonds, to whatever. They make loans to other people and they get interest off that money. Now, they always need to have 10% of all of their clients' funds available. So if for some reason clients withdraw money, they have the availability to give the money back immediately. But an important note to know is that if everyone decided all at once to withdraw all their money, most banks would struggle to survive and most banks would collapse if something like that were to happen. So getting back to how the bank actually collapsed. Well, what happened is that with their money, they made a big bet and they gave all their money to this treasury bond. Now, when they did this, they did it at a very low interest rate. And the problem is, right after that, interest rates across the board rose. And so because of that, that seemed like a really bad investment for the bank to do when all the interest rates just started rising rapidly. So because of that, it was like a bad bet. And then on top of that, most of Silicon Valley's bank clients are tech companies. And so they started pulling their money out of the bank. They didn't anticipate having so many people withdrawing all their money. They made a bad investment and then all these people are withdrawing money out of their bank account. They had to essentially get out of that treasury bond, but at a loss because tech companies are withdrawing their money all at once. This is the first domino that really hurt the bank, but they were doing okay, or okay-ish. To combat this, like all those people pulling their money out and having to take a loss on the treasury bond, they decided what they wanted to do is sell off 1/3 of their ownership stake in order to raise money to pay off the losses from the treasury bond because of all these people withdrawing money. The problem is word got out that the bank was struggling and their stock price fell dramatically. And so because of that, now 1/3 didn't have the same value that it could pull initially. And so just everyone pulling their money out, stock values falling, they took a big loss off this treasury bond, they were struggling and essentially they collapsed and now the FDIC had to take over. So most banks are FDIC, which means they insure up to $250K of any bank account's money. They make sure you get that back no matter what. Now the problem is only 3% of account holders have less than $250K in their bank account. So majority of these people who have bank accounts with this bank have large amounts of money, and so no one really knows what's gonna happen next with that money. And that's what makes people really scared. And now there's gonna be a lot of tech companies that just have a lot less money than they had before. They might get their money back at some point, but who knows? So I don't know what's gonna happen with all these businesses that had money with that Silicon Valley Bank. And it's the 16th biggest bank. This is a major problem. So the question now is this gonna happen to your bank? The answer is probably not. I think it was just an unusual storm for that particular bank. Most banks don't have all their account holders from one particular industry, and they aren't all trying to pull out all their money generally at the same time. A lot of tech companies are struggling right now and their stock prices are falling, so they're pulling their money out, and that was an unusual case. And then most banks don't make the kind of treasury bond bet that they made, and more banks are diversified. And I think this is a very isolated incident, and I don't see this happening to other banks. That's just my gut feel. I could be wrong, but I feel like that's not gonna happen to other banks. So your money is probably still safe in a bank, but almost all banks are only FDIC up to $250K. So what about the recession part? Well, recession, I still feel like I think it's coming. It's this combination of like, we had huge amounts of inflation and we're fighting that off by having a higher interest rate. Stock prices are falling. Make sure you have cash on hand. I think it's important. Yeah, be prepared for a recession for 2023. I'm pretty sure it's coming. Are property values gonna fall? Most certainly. There's no way around it. They're gonna fall. The Austin market or some of the bigger metropolitan cities will probably see less of a fall, but I'm only making prediction, but I do see prices falling. So just keep that in mind. I think it's just because they're trying to stop inflation. That's why the prices of houses just skyrocketed in prices, mainly because of the inflation. But now they're starting to fight it off. All the stock prices are falling. So right now it's just a weird time in the US financial markets in general. There's gonna be opportunities more for investors to snatch up properties coming soon. And as sellers, you might want to hold tight or sell quickly because I feel properties are falling. I'm gonna make more videos like this to give you updates on the general market that's going on in Austin and in the US and around the world. So stay tuned, like and subscribe, hit that notification bell, there'll be more videos coming to you soon. Bye.